Good morning and welcome to each and every one of you to the weekly analysis session for Monday the 27th of July 2015. Interesting end to our week on the markets on Saturday morning, seeing the US markets come off. The Dow came off around about 180 odd points. A little bit of interesting discussion about some information that may have been leaked, not directly from the Federal Open Committee, but more the back office folks who were looking at some numbers, etc., and potentially having a little bit of an impact on the markets. But I'm sure a little bit more news about that will come out over the next few days. All right, let's proceed. Don't forget, the Elite Academy is coming up soon. End of August to the early days in September. Great venue, great location, and all new topics that will be covered at the event while we're there. So hopefully we get some nice warm weather like that. Certainly getting a bit sick of the cold, damp, wintry conditions in Melbourne. Certainly longing for some warmer climes. So that's the Academy at the end of August. Our disclaimer: the content of this presentation or any other Elite Traders Club material does not constitute a recommendation, nor does it take into account your investment objectives, financial situation, nor particular needs. So please, before making an investing decision based upon the general advice presented in any of the Elite Wealth presentations, please consider whether the advice is appropriate in light of your financial circumstances. Okay, the agenda for today, as always, portfolio management, seeing what's happened on the markets at the moment, our market risk levels, and what that means for our trade management. Specific setups this particular week. I couldn't find any in the Australian market, and I only managed to find 2 in the US. So that's a little bit of market feedback, again coming back via our scans through Beyond Charts. I'll be interested to see whether any of you out there have managed to find any other suitable setups. There was certainly a number of trailed stops in the Australian market. There was 4 trailed stops which were on CZZ. Hopefully some of you got that in your portfolios. Capilano Honey seems to be performing very, very well. SHV, Select Harvest, really strong stock. AIA, Auckland Airports, and IVE, which is an ETF, which is performing well. Also, in the US, there were 12 trail stops, and we'll go through and have a look at each one of those on Beyond Charts as well. A couple of stop outs, 1 in the Australian market and 4 in the US. There are also a number of cancelled trades in the US as well, 4 of those, and we'll go through and have a look at those on Beyond Charts as well. So let's get underway and perhaps see what's happened with our market risk. Well, at the moment in the Australian market, we are still in high risk. So as such, it means that we use a 40% market risk multiplier. So we apply that to our maximum allowable drawdown, which for most of us is around about 15%. So 40% of that 15% is what you're allowed to have exposed to the market. In the US, we ticked over to low risk on Monday, I think it was. We'll go and confirm that in a moment. But because we're in low risk, it means that we can use a 100% market risk multiplier. So if your maximum allowable drawdown is 15% and you are trading just the US markets, then you're allowed to have 100% of that or all of that 15% exposed as value at risk in the market. Assuming we are splitting our portfolios between Australia and the US, it would mean that 7.5% of our allowable drawdown is allocated to the Australian side of the portfolio, and because we're using a market risk multiplier of 40%, because we're in high risk, that means that we would be allowed a total of 3% value at risk across our portfolio, and that would be allocated to Australian risk. On the other side of the ledger, the other 7.5% allocated to the US markets, you can use all of that 7.5%, because we are in a low risk market environment in the US. Again, if you're having any troubles understanding that, please request a coaching call and we'll talk you through that. Those of you who are choosing to scale out at various targets along the way, high risk in Australia means that you are looking to get out at 1-to-1. Those of you who are scaling out and in the US, you're looking for targets of 3-to-1. All right, let's go and have a look at the markets now. Just a quick recap from last week. Last week's education session that we ran was on the use of overlays in Beyond Charts. So if you're not familiar with the use of how to create some of your overlays, renaming them, adding indicators, etc., coming up with some of your own personalised overlays, then go and have a look at that recording. It's in the education portal. And hopefully by the end of this week, we will also have those three components of ETC, your education sessions, the macroeconomic session, and the weekly analysis sessions, separated into three separate folders, if you like. So you'll be able to see them totally separated, as opposed to all being located, as they are at the moment, in one file, which will be great as well. So let's go and have a look at what's happened on the markets over this last week. There's our S&P 1500, our benchmark index there. And you can see on this particular day here, that must have been the Tuesday, I think it was, yes, the Tuesday, we just dragged over to low risk on our benchmark. So as such, allowing us to have 100% of our value at risk allocated to that particular market. No sooner did it do that, and we followed up with 3 downward days. A fairly big downward day on the Friday. And again, to do with some leaking of some information from, perhaps we might call it the Fed back office, unofficial data leaked to do with rate of interest rate rises, to do with GDP, all those sorts of things, forecasts and whatnot. Unofficial data at this point, so it'll be interesting to see what happens with all of that at this point in time. So let's go through and have a look at the Aussie market. And there we go. So we are still in high risk. Again, not that dissimilar. High risk towards the beginning of last week. We got dragged up into high risk, remembering we were in very high risk. And no sooner did we get there and our market rolled over a little bit. It'll be interesting to see what happens, whether or not that information coming out of the US has an impact on our markets this morning. I haven't had a look at the index at this point in time, but again, it's always the close that's more important than the open. So that's where we are at this particular point in time. So as I mentioned, didn't have any new setups in the Australian market. So what we'll do is we'll dive in and have a look at the two that I managed to find in the US, and then we'll go through and have a look at defer to you guys and see whether you've got any new setups that you've managed to find, and then we'll go through and have a look at some stocks, S-T-O-C-K, some stocks that have had their stops trailed, some stocks that have been stopped out along the way as well. So the first one on the list was CRI. And again, a lot of nice white candles in this as well. And this is set up a number of times previously. You can see where we've had a series of really nice higher medium-term troughs. It's gone up. It's put in another higher medium-term trough and been confirmed as such by the candle last week. The previous candle not confirming any upward movement in short-term trend, but last week's candle certainly did. The last medium-term trough well clear of the second from last medium-term peak, so exhibiting good price action. We just need to zoom out and see where we are, and we are at all-time highs, so looking really good. As such, we need to place a non-stop order 2 pips above our last medium-term peak, so let's go and see what that level is. That level there is 109.30. I've got a non-stop order there of 109.57. Why is that? Well, let's go and have a look at the last candle, and you'll see that the last candle has actually already moved just a small amount above our last medium-term peak. So as such, we need to place an on-stop order 2 pips above the high of this last candle, which is 109.53. So our on-stop order should be 109.55. David, not 57. 55, with a limit to 110.39. Now I'm just going to check that because that seems a fair way above my medium-term peak. So Again, I'll just bring up my calculator, just go through the process. Again, so our last medium term peak is 109.30. Multiplied by 1%, 1.01 on the calculator, gives us 110.39. So there we go, 110.39 is the limit at which we want to place our order. So we're entering 2 pips above the high of our last candle, acknowledging the fact that we have already moved beyond our last medium term peak, but we've got ourselves a limit. So we're saying, okay, the trade is still valid as long as price hasn't moved beyond 1% above our last medium term peak. So hopefully that's making sense. If you've got any queries about that, certainly you know what to do. Just give us a request a coaching call and we'll talk you through that. So CRI on stop at 109.55 with a limit to 110.39 and a protective stop outside of 2 ATRs and certainly well clear of that last medium term trough. So the stop coming in at 102.57. That's CRI. The other one on the list that I had is AZZ. So let's just zoom out on this one and just see where we are. You'll see that we've broken out from very much a sideways type of pattern where the price has really just stagnated around that $50 level, hasn't been able to get through that. Over an extended period of time, we started to get higher medium-term troughs, eventually breaking out of what was a fairly strong resistance level. Prices moving up. It's had a retracement coming back to the previous breakout level, which is generally a very good sign. Certainly the candles could be a little bit more promising. However, given the broader market context, not too bad at this point. Last candle, certainly a little bit of indecision. We've almost got 2 opposite pin bars. The second last candle, not really a pin bar. Close to it, not too far away, but certainly those last 2 candles, a little bit of indecision occurring there. Certainly, the fact that we've got tails on the top of these candles is not necessarily that good a sign. However, that really just shows that there is supply at this level that's been coming in. Should that supply be broken, though, this is a sort of price action that can experience quick movements to the upside as people realise that there was absolutely no need to get out of the stock at that point, should that level be broken. In terms of price action, last trough, is it at or above second from last peak? Looks very close. Let's get the value line out and check. So the low there, I'll just move that annotation out of the way. That low there is 51.66 and our high over here is 49.57. So that last medium term trough, well clear of that second from last medium term peak. As such, all we need to do is place an on-stop order 2 pips above the high of our last medium term peak. So we have an on-stop order at $54.03 with a limit to 1% above that at $54.57. A protective stop at least 0.5% below our last medium term trough and outside of 2 ATRs has our protective stop coming in at $49.25. They were the only 2 stocks I could find on the US. Guys, did you manage to find any setups out there on the US? Got another one on USA, HLS. Okay. Fantastic. Thanks, Kim. HLS. Health South Corp. Perfect. Let's go and have a look. When you're ready, Beyond Charts. There we go. Perfect. All right, so let's put on our swing chart and let's zoom in a little bit and check out our price action on this one. All right, last trough. We'll just go through and do the right thing and check. So the low of our last medium term trough is at 45.03. Is that above our last medium term peak? Last medium term peak there, 44.96. 44.96. And the low there, 45.03. So it is. So it's about 7 cents above that last medium term peak. So as such, it does qualify for our price action filter, so that's perfect. Let's just zoom out and see where we are in the scheme of things. At this point in time, the only thing we need to sort of think about, it's a long way ago. 2005 is this particular level here. That's prehistoric. And we're beyond that in any case. So other than that, we're pretty well clear until we get into this area over here. Let's just zoom in and just sort of see where the major points of supply are for the future. We're really looking up towards the $85 level, so plenty of room for this stock to move in an upwards direction, which is a great thing. So let's just zoom in. So all we have to do from this point of view is place an on-stop order 2 pips above the high of our last medium-term peak. And that last medium-term peak is 48.32. So 2 pips above that is 48.34. So let's put that in. Oops, wrong one. Horizontal line, David. 48.34. 48.34. Let's change the color. Let's make that blue. And we need to put in our protective stop, and Kim has kindly worked that out for us at 43.67. Perfect. 43.67. 43.67. So that's 2 ATRs as a minimum below our entry level. So we'll pop that in. We'll change him to red. 43.67. And now the same thing I'm going to do is I'm actually going to create an analysis on this one to start with. So all that material, all those lines that we've got on there, will stay there next time we bring the stock up. With a little bit of luck, there we go. Now, to make sure that each time that I come in and have a look at this stock, that the annotations and everything have been saved, I'm going to set this as the default. The other important point of this is when I do set it as the default, just a reminder that when I go to my chart settings and I have analyses auto load, therefore it will automatically load any analysis that I have associated with this chart. So that's an important concept as well. Now, just remembering, I've got this line that I've just drawn in, and these little tag lines at the side here, quite often when we try to zoom in or out or move it down, can very well drag those the blue line down and change the numbers, and that's probably exactly what's going to happen, which it certainly has. So let's go back and just change that and make sure it's exactly right. So we had 48.34, so 48.34, and this is the reason why I'm going through and doing this, is that just to show that this sort of thing is going to happen from time to time on your own Beyond charts. So when it does, just a little thing to be mindful of that, because the numbers that you can type in certainly will change if you try and drag the chart down. So we've got our on-stop order in there. Let's go through and put on our annotation very simply, and we'll type it in. On-stop at 34, sorry, not 34, David, 48. Monday morning, 48.34, with a limit to 1% above that level. So let's just go through and do that. 48.34 multiplied by 1.01 equals 48.82. 82, and stop could be a stop, but we'll call it a stop, at 43.67, 43.67. Escape out of that. So I've changed some of those details, so I'll just go back into my analyses. I'll click on the analysis there. You'll see that it's been ticked, so that means it is the default. So I'm just going to go up to the top, save it. So those little alterations have now been saved. Other thing I need to do is I need to add it to the existing watch list. So I'm not too sure why that's opened up the Analysis Manager. It should open up my watch list explorer, or at least open up the little window that says, there we go, which watch list did I want to add it into, and I want to add it into USA, July 27th, pending list. And there we go, and you'll see on the right hand side that's been added too. So hopefully that makes sense for everybody out there, and that particular process is something that you're doing yourselves in any case. All right, any others on the US? Darren, you had RIC on the ASX, question mark on a couple of long-term peaks in the past. All right, so let's go and have a look at that one in the ASX just as an example. RIC, Ridley Corporation. All right, just make sure that we're on a weekly chart there, that's fine. And go back to our favourites, we'll put on our swing chart, and let's just have a bit of a look in terms of price action. Well, at the moment, Darren, I don't have the confirming candle saying that we're in a short-term uptrend, so that's something that I'm always looking for. If we do happen to get a candle this week that has a higher high and a higher low, that will confirm the formation of a new medium-term trough and a resumption of the short-term uptrend, and so therefore we will have three trends in alignment. So from that point of view, it's not something that I would be looking to enter at this point in time. Certainly those of you who are a bit more aggressive and like to take trades where you are expecting the price to turn around and move above our last medium-term peak, then that's something that is up to the individual. But as far as ETC is at the moment, really just wanting to make sure that we've got all our trends in alignment, that we've got confirmed short-term uptrend as well. All right, let's go through the portfolio and have a bit of a look at some of the trailed stops in the Australian, those stocks in the Australian market at the moment. So I'll go through and have a look at our open list for the ASX and have a look at how some of these stocks are holding up given relative market weakness. I think it's important just to reflect on some of those stocks that are in the portfolio, and just a bit of a reminder about the importance of relative strength as well. So Capilano Honey, let's just zoom in and have a bit of a look at how this one's been going. Been performing really, really well. Very strong stock, really good relative strength. And you can see that last week there, the last candle dragging our trailing 3 ATR up again above our initial entry level. So performing really, really well, performing very strongly. And it's been, this is a stock, if we scroll out, that over the last little while has certainly been holding up very, very nicely against the broader market. Some of the other ones that we've trailed the stops on the Australian market, off the top of my head here, just go through. We had AIA, Auckland International Airports. Again, really good price action over the last month. Again, keeping in mind what's happened with the local market. Nice, really nice, healthy candle last week, following up, almost a pin bar the previous week. So moving up nice and strongly, and as a result, dragging that trailing 3 ATR upwards. Lots of room for this this stock to move along. In fact, this is a stock that has really benefited from the trailing 3 ATR. Down here on this particular candle, it looks very close. The close on that day, 332. And you'll see the little green number there, 331.7. So did it close below our trailing 3 ATR? No, it didn't. And this is a stock that, again, not unlike Ramsay, has been one that's just really stuck along its, a really strong trend. It's been given plenty of room to move, and it's paid off in spades because it's allowed, this stock to move up for a long period of time. And hopefully some of you may well have even had this in your portfolio from years gone by. If you have and you just followed that simple rule, then this is something that's really going to make a significant difference to your returns over the course of the years. Other stocks that have had their protective stops trailed: SHV, Select Harvest. Is this going to be the next Ramsay Health Care? Well, it's certainly a stock that's performed really, really well, even when it's had been volatile with the market. Its directional strength is certainly unquestioned. Look at all the white candles. Whenever we've had a bit of a pullback, clear demand, just waiting on the sidelines for this to come back to an acceptable level, and bang, two big, strong, beautiful white candles performing really, really well. So hopefully some of you have got that in your portfolio. IVE was another one. This is the ETF that's got a number of different markets in it. Again, the trailing 3 ATR, it's giving it plenty of room. It did move down over a few weeks ago, but no sooner did it do that, it was met by demand. It's moving up strongly again. And last week, just dragging the protective stop up slightly as well. They were the main ones on the Australian market. Let's go across to our US market and have a bit of a look at some of the trails on those. So the opens at this point in time, and then we'll go through and have a look at some of those the stocks that stopped out over the course of last week as well. All right, so just zooming in a little bit, just get a bit of perspective on things. Some of the stops that were trailed in the US: ASH, Ashland. This is one that was a stop out. You're looking at the wrong list there, David. Interesting. This is one that had moved up, had been given plenty of space by virtue of its trailing 3 ATR. A couple of weeks ago, it came down, moved below its trailing 3 ATR, and then price moved back up. The following week was a little bit indecisive, and last week now closing below the trailing 3 ATR. So as a result, this is the same sort of thing here. Closing below its trailing 3 ATR means that we are now out of that particular stock. That was ASH. Not a trailed stop, but a stop out. So while we're on stop outs, I may as well keep going with those. CI was another one. CI is a stock that had been performing pretty well. I think it was CI of recent times. This was our entry level back here. A lot of white candles, big strong white candle through there. Don't forget your price volume volatility signal as well. So whenever that goes off, if you are up sufficiently in your portfolio or on this particular stock, then that's an opportunity for you to take part profits. And so generally what that would mean is exiting half your position and seeing what happens thereafter. So on that particular level, getting in above that sort of 135.02, our price volume volatility signal going off the close there at 161. So the difference between 135 and 161 is around about $25. So $25 on 135. That's around about an 18.5% return in around about 6 weeks. So if that's something that you think is a good return, 18% in around about 6 weeks, then certainly would be encouraging you to take part profits, at least selling half, and then that way, if you do happen to be stopped out, then you're splitting the difference on your trade outcomes. As such, on Friday, or Saturday morning rather, price closing below, you'll see the close there, 145.72, And I'll just put on our value line so you can see the, there we go. Our trailing 3 ATR is at 146.75 and price closing below that at 145.72. So exiting at market tonight. That's in the US and that's on CI. Another stop out was DST. Let's go through and have a look at him or her. Stock had been performing really well, had been given lots of space with its trailing 3 ATR. This was our initial entry level. And you'll see, dirty big black candle, unfortunately. And as such, the price is closed below our trailing 3 ATR. So it means that we need to exit this week. So we have a close at 107.99. When the market opens tonight, we'd be looking to get out of that particular stock. So, you know, the trailing 3 ATR, use of soft stops as opposed to hard stops. Typically, the soft stops over the last few years has allowed us to remain in stocks when they've experienced some weakness and prices come down. On the flip side of that, from time to time, you will have stocks that do a move like this, call it what you like. It's not a particularly pleasant move, and close quite a long way below the trailing 3 ATR. So you have to accept that occasionally this is going to occur if you're choosing to use soft stops. If you're choosing to use hard stops, certainly depending on price action during the course of the week, let's go and have a look what happens. So if you were using a hard stop on your trailing 3 ATR, so we'll go back to the trailing 3 ATR, which was at 122.61. 122.61 is at around about this type of level. You would have been stopped out a couple of days prior and not experienced such a large drawdown as a result of that. The flip side of using a hard stop is that there's going to be occasions where price comes down, triggers your hard stop only to turn around and move back up. Is there a right way or a wrong way? No, there's not. It's really up to each and every one of you as to determine what method of stops you prefer to use. But I think it's an important discussion to have and for you to continue to think about, because you need to be consistent with these really important aspects of your trade management. The other one that got stopped out was FDX. So let's go through and have a look at that one. And FDX, you can see the last few weeks has really sort of struggled. In fact, there hasn't been a lot of joy for this one since initial breakout back in about October of last year. It got off to a good start and then really just sort of stagnated for a period of time. It looked like it was going to start moving again, but obviously market weakness over the last 6 weeks or so, certainly putting in lower peaks. Lower peaks through here as well, but managed to hold up. And here, as an example, where if you had a hard stop on this, based on the 3 ATR, you would have been triggered out, and you wouldn't have seen any of the potential upward move, which may have, we never know in the end, may have kept on going to the upward side. In this case, it didn't. It came back down. Price is now closed below our trailing 3 ATR, and as a result, you're ending up getting out pretty much a break even from entry point along the way. So that would have been a very frustrating trade, having been in that for about 8 months, for the whole thing to go sideways. But using the 3 ATR certainly gives it every opportunity for it to turn around. So they were the stop outs. So let's go through and have a look at the trailed stops in this particular case. So what we want to have a look at is here's my list there, David. ACGL, Arch Capital. Really strong stock, this one. Again, look at all the white candles, and it just continues to move higher and higher and higher. Not unlike Select Harvest, a lot of white candles, and again, just strong price action, dragging that 380 up further again this week. The next one was IHI. Again, another ETF, US Medical Shares ETF. Again, nice price action, good relative strength. I don't even need the relative strength indicator on because you've only got to think about what's happened with the US market over the course of the last week, going in a downward direction and this moving up in the upward direction there. And as a result, dragging that 3 ATR line now above. It's been above the initial stop for a little while now, so that's also a positive sign. Next one on the list was JAH. And again, a little bit more upward movement, just dragging our trailing 3 ATR up in a higher direction. This particular stock, again, just moving out of this sideways movement here. I'll draw that line in. It was supposed to be a horizontal line. It's horizontal now. That's sort of sideways stagnation movement, if you like, just moving out of there. A little bit of indecision, but moving in the right direction against the broader market direction. That was JAH. LII, Lennox International, having its stock trail up a little bit as well. Interesting candle, gapping up, certainly midway through the week, being a big dirty black candle, only to close up towards its high. So certainly an encouraging pin bar there. The only better pin bar than that one would have been a pin bar with a white body as opposed to a black one. But nevertheless, pretty strong candle given what the rest of the market has done. MANH, travelling along really nicely as well. Really strong candle last week. Really good price action of recent times. So again, performing very, very nicely for the watch list. MSCI, another one. Again, nice candles. 3 very nice candles. Nice and white, closing near their highs. Very strong price action. As such, you can see the amount of work that's been done by these last 3 candles and really heaving that trailing 3 ATR to the upward side as well. Another example here where a soft stop based on a 3 ATR, a couple of times where prices come down, touched your trailing 3 ATR, hasn't closed below, and as such has allowed the stock to continue on its merry way. So again, both sides, and I think it's worth going through and looking at examples that have worked out and then examples where they haven't worked out. Orly, I know some of you have been in this stock in the past. Orly Automotive, and that's what it continues to do, just motoring along. So just been, again, a very nice performer, and again, well respecting of its trailing 3 ATR. So, not without its boring periods. You can look through here from an example from February of last year through to September. The thing went sideways, and then the market came back, became focus of attention, and along it went. So that's a very nice looking chart at this point in time. Orly QLIK was one that has recently just triggered in a couple of weeks ago, and I'll just put on there the trailing 3 ATR, and that trailing 3 ATR you'll see has just now surpassed the initial protective stop. So the initial stop was at 34.24. Now trailing stop now coming in at 34.63. So again, a nice thing for that to be occurring. A nice big candle last week. Really good price action on that one. Starbucks, that's only been in the watch list for a couple of weeks. And let's just put on that 3 ATR, and you'll see similar scenario here in that trailing 3 ATR has now surpassed our initial stop. Our initial stop at 51.01. The trailing stop now coming in at 51.20. So again, some nice white candles doing the hard work and pulling up that protective stop. TSS. Again, look at the white candles. Really good relative strength. Nice big bodies on these candles given what's happened with the rest of the market, and trailing that stop up nicely again to 40.91. So this will all be reflected in the watch list, which will come out a little bit later this morning. VRX, Another trail as well. Hasn't quite got up as far as our initial protective stop, so the stop for the time being will still remain at 221.35, but certainly not getting too far away. That big white candle last week really just pulling up that trailing stop. So for the time being, our stop is still the 221.35. If we get another week like same as the week we've just had, then that's going to pull this trailing stop up even further beyond our initial protective stop. Some cancelled orders in the US for this particular week. We had 4 cancelled orders. One of those was Met, so we might go back to our pendings from the previous week. And we had MET, MetLife. Maybe that's not going to come up. MET. Come on, be on charts. MET. Well, maybe if you can't do it one way, let's do it another way. MET. Okay, so there's MetLife, and because I saved it as an analysis, it's got all the data already on there. You'll see that last week's candle, as a result, we had a lower high and a lower low, so we are now in short-term downtrend. As a result, we've had the formation of a lower peak. So now this particular setup is not going to meet our price action filter. And as a result, that's going to come out of the pending setups on the watch list. So just be mindful of that one. Another one was GILD. And we'll do it the same way. GILD. And that's the one. So let's go through and zoom in a little bit on this one. Exactly the same as the previous one. We've now got the formation of short-term downtrend, and by virtue of that, we've had the formation of a lower peak. So again, it's not going to meet our price action filter, so that will be coming out of the watch list. DLTR was another one. Dollar Tree. And all in good time. This is one that's been in the watch list for a few weeks now, and just recently with that the lower low and the lower high of last week now confirmed short-term downtrend. We've got the formation of lower peaks. As such, this one's not going to meet our price action filter, and that will be coming out of the watch list as well. The other one, FDX, good old Beyond Charts. And FDX, I just want to make sure that's on a weekly. Now, maybe this is where this is not a one that's coming out of the watch list. This is actually a stop out situation. So this is one that we looked at earlier. So I'm not too sure why that. I know why it's come up there, because I was looking at the wrong line on my listed notes. So that was a stop out. The other cancelled order was Target, TGT. So we'll see if we can bring that up there. Target Corporation. Come on, Beyond Charts. There we go. So you'll see the previous week we had a setup where we had the last medium-term trough well clear of the second from last medium-term peak. We were looking for a break above our medium-term peak there at 85.83. Last week we had a very bearish candle. As such, lower high, lower low. We're now short-term downtrend. Because of that, we have the confirmation that a lower medium-term peak is formed, so therefore it voids or invalidates our price action filter. There we go. Ken says, what do I think of Amber? AMBA. I've had a look at Amber before. I think Amber is well and truly gone. I'll have to have a bit of a look. Amberella. Yeah, the price action on this one, Ken. The only problem with this one is that it's moved very strongly. If we're looking to take a breakout, even if we a couple of pips above this last candle, we've got to hide our protective stop below the last medium-term trough. So if we think about that, we're going to end up with a protective stop at the very least coming in at around about 91 odd dollars, even if it's 92, and we're going to be entering at around about 130. That's a really massive stop distance in percentage terms. So that's around about it's at around about $37 on $130 stock. So if we just do that, 37 divided by 130, just as a rough approximation, you're looking at nearly a 30% stop distance on that particular one. So you're really asking that stock to do a lot of work to get to a basic one-to-one target. So that's the reason why that wouldn't be in there, Ken. Any other questions, guys? Speaking of touching and not closing below 3 ATR, Kim says, can you explain why BX was put in the watch list as a hard stop for breaching the 3 ATR line a couple of weeks ago? Yeah, okay, so let's have a look at BX, Blackstone. And come on, Beyond Charts, I know you can do it, it's Monday morning. Okay, so let's go through and have a bit of a look at this one. All right, so let's zoom in. Triggered 4th of May. Yeah, so Kim's saying, question there, because what we had previously, this was our initial 2 ATR based protective stop. Price came down, breached that protective stop, and as such we had, once you have a protective stop that has been breached, so a soft stop that has been breached, it therefore then must be converted to a hard stop. So hard stop coming in there a little bit below there, you'll see that faint red line, that's the hard stop. And last week at the same time as closing below our 3 ATR also triggered the hard stop as well. So Kim's saying was put in the watch list as a hard stop for breaching the 3 ATR line. Shouldn't have been for breaching the 3 ATR line, Kim. I will certainly go and have a look. In fact, I'll just bring up our watch list, so BX, and we'll have a look. Kim says, BX, I see my initial stop loss was lower than yours, all good. All right, so I'll just bring up our watch list in any case. Here we go. Well, maybe if my computer will allow it. Here we go. A few technical glitches here this morning. There we go. Beyond Charts being a little bit problematic. So let's go through to what we're after. BX, Blackstone. It may well be out of the watch list by now. There we go. So this week, BX, soft stop breach, converting to a hard stop at 38.36. That was on the 13th. And as a result, this last week, triggering that hard stop down at that 38.36 level. So also at the same time, closing below that trailing 3 ATR. But good questions. Any other questions, folks? No, well, hopefully your portfolios are holding up reasonably well. My personal portfolio in the ASX is certainly holding up pretty well. It's certainly not without its movements up and down, but there are still some stocks out there, whether it's in the US market or whether it's in the Australian market, that are holding up quite well. So continue to do the right thing, continue to manage your trades in a diligent, correct manner. Again, don't strangle your trades, let them have their reign. If our market is to move upwards, then those that you're in at the moment are going to benefit from that patience, and that's all you can do from a trading point of view. So other than that, this week, keep an eye out for some invitations to a webinar which we are releasing, or rather running, probably Wednesday or Thursday at this stage, on the new ETF strategy. So myself and Jeff Saffer will be presenting that. That'll be a live webinar. It'll be recorded as well in case you can't happen to get there in person. So that'll be discussing the ETF strategy, how it's originated, the basic need for another alternative. It's a different strategy that will be invested in the market at all times. So when you're having difficulty managing your portfolios, when we have different levels of market risk and you're looking to cut your exposure, this is a model which will actually allow you to participate in the market at all times. So keep an eye out for that. Right, guys, we will, if we don't catch you at that webinar, there will be an education session this Wednesday afternoon. And then again, our macroeconomic session on Friday, and then of course same time next Monday. So that's it for me. Good luck with your trading this week, and we'll speak to you soon. Bye for now.